Hey guys, it's Kevin here. Airbnb is expected to IPO on December 9th, and I'm planning to put some money in there. So today, I thought I'd go over some highlights from their S1 filing, including 1, their growth outlook, 2, risk factors we should be aware of, and 3, what this all means for their valuation. So let's get started. If you're new here, welcome to Wealth Wins, the channel that brings you closer to financial independence every week. Make sure you smash that subscribe button and click the notification bell. And while you're down there, I'd appreciate it if you turn that little thumbs up button blue for me. I aim to post videos weekly, and when it comes to stock videos, I think I do a little bit more research than probably the average person. So hopefully I provide you a little bit more information than some other YouTubers out there, and especially, other people like Jim Cramer.
What can I say about the upcoming Airbnb IPO? I'll tell you what I say. I think it'll be a steal. Buy!
I use some of the same methodologies that professional investors and equity researchers use, and so hopefully that levels the playing field for some of y'all. If you haven't been living under a rock, then you know that Airbnb is a marketplace for hosting and finding living spaces in over 220 different countries. But in addition to that, they actually also offer local experiences as well as online experiences, which they only recently introduced in light of the pandemic. In their core offering of rentals, that's also further subdivided. So they've got the regular Airbnb platform, as well as Airbnb Plus, Airbnb Luxe, Airbnb for work, as well as the Hotels Tonight app. Airbnb Plus is for people who are looking for super hosts who offer the best in terms of amenities, interior design, and service, while people who go for Airbnb Luxe are really looking for those villas, mansions, and even castles that start, in the thousands of dollars per night. So let's jump into the actual numbers. So if you look at their S1 filings, it looks like their historical growth, the top line growth in terms of nights and experiences booked, we see that they suffered a huge drop in March and April of this year, where net bookings actually went negative due to a huge number of cancellations. However, since then, they've seen a steady climb back to about 30% under where they were in 2019. And this 30% drop is kind of roughly in line with the occupancy rate drops in hotels. However, unlike hotels, which operate capital-intensive businesses, Airbnb's expense ratios are a lot lower since they don't own any of their own real estate. And you see that in their cost of capital, which is really only about 25% of their revenue. So booking value, which is how much people are spending on your platform, is down about 30% so far. But the picture looks a little bit better if you actually just look at revenue, which is how much actually goes to Airbnb. So looking at actual revenues, because their daily booking rates have actually increased compared to last year, their actual revenue is only down about 17%. This is attributed to increases in domestic, short distance, and long-term stays, which have offset the reductions in international stays. And if you're worried about Airbnb losing a bunch of money everywhere, that's somewhat valid, but it's kind of offset by the fact that we've actually seen them hit profitability on an EBITDA basis before in 2018. But I think, and I'm speculating here, that they likely ramped up marketing and sales spend in an effort to show better numbers in preparation for an IPO. And I think that's because they realize that there's this huge opportunity because they currently only have about 2.5% to 3% of the overnight stays market. And that could be a lot more if they can go and acquire more users. And based on the business model, even though their EBITDA margin is only 8% of revenue right now, based on the comparable companies in the market, we should expect that to increase to 30% or more in the future. And the company is supposed to make money. Like, if you look at their historical cash flows since 2016, they've been cash flow positive in most of those years. And we saw a glimpse of profitability in Q3 2020, so the most recent quarter. They actually made a little bit of money because they reduced headcount by about 25%, which they say is sustainable, and they reduced their discretionary marketing spend, close to zero, which I think, they'll bump that up over time, but it shows that, in the long term, this business should be self-sustaining. I think the two biggest drivers for capturing further market share here are brand and differentiated supply. Brand is not just about that people know the brand, but exists in the vernacular as the first option for everything from a large group travel to budget travel and everything in between. So, for millennials, the slice of the market with the largest spending power right now, like, how many times have you heard, let's find an Airbnb versus, does anyone say, like, let's find a Marriott or let's Expedia a hotel? I mean, this really bears out in their data too. If you look at their cohort retention, you see that 30 to 50% of users who use Airbnb come back and use it, the next year, the year after that, so on and so forth. And so, people aren't really going back to the same hotel chains. And I think that's because unlike, traditional hotel chains where the offerings feel kind of largely the same outside of, some lock-in effects through corporate discounts and, like loyalty rewards, they're really not able to offer anything differentiated outside of like 1 and 2 bed, 1 bath options. So you can definitely think of Airbnb expanding into other areas like travel packages and more structured offerings for work, which are both hugely lucrative slices of the market. Just a quick aside, you might have noticed that the plant that's usually in my background got a little bit bigger, and that's because it's the holidays. And I think it's go big or go home. And since we're all already home, let's go for going big. So I'm gifting you guys all 4 free stocks with Webull, and that's worth potentially up to $6,400. So why not give yourself some free money this holidays? And if you do that, you can also help support the channel. So check the link in the description down below. And if you don't like the stocks that you get, feel free to sell them and go buy some Airbnb instead. So let's talk about some risks here. I think there are 4 main risks we should be aware of, which are obviously COVID, regulation, and taxes. So COVID, obviously, if COVID keeps going on, that's going to materially impact the business. But I think we've seen that there's been resiliency in the business. And so, even though there is some decrease in the international travel market, we've seen that get offset, and not every market's going to get impacted the same way. We've seen, a lot of these countries in East Asia already get their shit under control. So hopefully, the other countries follow suit. But if not, there's still a global base to distribute those revenues across. So in terms of regulation, I think the biggest one that I'm concerned about is just regulations restricting the use of Airbnb. And I think that's especially pertinent in Europe, which represents 40% of their revenues. You've got all these mayors from London, Barcelona, Paris, working together to try to take control or limit the power of Airbnb in these countries. And in Amsterdam, they actually passed laws where you're restricted from having Airbnbs at all in certain parts of the city. And in other parts of the city, you need permits. And even with those permits, you can only rent them out for up to 30 days a year, which is kind of nothing if you're trying to run it as a kind of a full-time business. This is, I think, the biggest concern in my view. Unlike marketplaces like Uber, the homeowners who host on Airbnb and the out-of-town tourists, neither one are really viewed favorably by the media. And so I think it's going to take a really concentrated effort over the next 5 years to overcome these desires for more regulations in these markets. And so, despite Brian Chesky saying that, they're already handling and they're already dealing with regulation in these cities, the worry is about more regulation, right? And so even though none of the cities represent more than 2.5% of the company's revenue, if, all 20 of these major cities decide to band together and pass the same kind of legislation, that represents probably somewhere between 20 and 30% revenue risk to the company. On a separate regulation note, Airbnb operates under a VIE, which is a variable interest entity in China. And I think that's also kind of another risk that people don't really talk about. Basically, every foreign company that wants to do business in China has to go through this sort of like workaround to set up a separate entity, which then agrees to conduct business in China through a series of contracts with the foreign entity. And while you usually vet the people who lead these VIEs, there's always a risk that they go rogue or they take over the company or do something that's not beneficial to Airbnb, the parent company. And really the problem here is that VIEs they operate in this kind of gray area in Chinese law. And so none of the contracts that get signed are actually really enforceable in China. So that's just a risk. Every company that does business in China goes through this, and so it's kind of known and kind of accepted, but there's always a chance, right? And the last risk, I think, is really around taxes. So back in 2013, I think, Airbnb pulled this maneuver where they put all their IP in a separate entity to basically get a tax deduction. And we've seen Uber pull this off for, I think, $6.1 billion. And so even though the IRS is coming after them for basically not paying for that IP or whatever, I don't really think that's a huge risk, but it's noted in their S1 filing, so I thought I'd call it out. So we've covered the growth outlooks, we've covered the risk factors. Let's talk about valuation. Airbnb is planning to sell shares on Wednesday around $45 to $50 at IPO. That's going to value them right around $30 billion. So is that a fair valuation? Overpriced? Undervalued? Honestly, I'm going to cut to the chase. I think it's a steal. We can try to find an appropriate valuation either based on comps, which is comparing Airbnb against similar companies based on the same metrics, or against previous funding history. In 2017, they were already valued at $31 billion, so slightly more than what they want to IPO now. And that was at even lower booked value and lower revenues. So in light of COVID, they've shown their resiliency already. And so I actually think there's a underpricing here. So even if we just assume that they return to the same revenues as 2019, if we use the same price to sales ratios that they used to value the company back in 2017, that represents a valuation of right around $60 billion. So even if we're more conservative than that, and we just project out the rest of 2020, even at their current run rate, that's, I think, right around $50 billion. So, that's a price target right around $85 to $100, which is a 40% to 70% upside to their IPO pricing. If we use comps, then the comparable set here is probably Bookings Group, Trip.com, which operates mostly in China, as well as Expedia. And the metric we can use here is price to sales, which is just basically the value of the company compared to the revenue it brings in. And for the target group, it's right around 2.6 times price to sales to 10x price to sales. And that's really kind of on the low end of what I think Airbnb should be valued for, because all these companies are relatively mature. And outside of Trip, which is growing in the mid-teens, Expedia is growing at 7% a year, and Booking is growing at 4% a year. And all these companies are down 50% this year compared to just 20% year-over-year growth for Airbnb and being down just 30% this year. So if anything, Airbnb should get valued on the top end of this range, if not even more. And so conservatively, if we look at a 10x price to sales ratio, then Airbnb's valuation under this comps model is around $35 billion. The other way to consider valuing Airbnb is as a story stock. So what that means is rather than looking and focusing on the metrics, really you're focusing on the narrative. And so as more retail investors really become more bullish on Airbnb, they'll want to buy in kind of regardless of what valuation it's at. And what that leads to is, these massive increases in valuation relative to these multiples we're talking about. If you just look at, say, the EV space, we've seen every company in that space double in the span of 2 weeks. And Tesla continues, breaking every bear, breaking every short, left, right, center, front, back, top, down, you name it, right? And that might be the case with Airbnb because, it's got the name recognition amongst the retail crowd to really drive up in value. So even if you just look at the P ratios of the travel space, which are currently 50x to 150x, we can kind of forecast out EBITDAs for Airbnb kind of normalizing as the recession, as the pandemic recedes, and assuming that EBITDA margins grow to about 30%, which is in line with the industry, then hopefully we see EPS targets right around $1 a share, and that would lead to valuations anywhere from 30 billion to 90 billion and up, right? Again, we're talking about trying to push Airbnb up to the top of this range because of its narrative. So using all these various ways of trying to value Airbnb, we end up with a target valuation range from $30 billion to $90 billion plus. And I know that's a big range, but really the takeaway here should be that there's only upside from here, right? Airbnb is supposed to IPO right around $30 billion and should only go up and to the right? But don't take my word for it. There's an equity analyst from Atlantic Equities who's already written a report, and he set a target at $75 a share, which is 50% up from where it should IPO at. Airbnb IPOs on December 9th, but that's really only when a select number of investors get to buy IPO shares. For the rest of us, retail folk, we'll get to buy it on December 10th, which is the listing day, and you can find Airbnb listed under the ticker symbol ABNB. I'm personally going to be targeting buying shares right around $50 to $70, trying to deploy about half of my target allocation on day one and buy any dips that happen thereafter. And the reason for this for me is, I expect Airbnb to do well in Q4, but there's always a chance that they disappoint because of lowered revenue from new restrictions in countries that are experiencing a resurgence in COVID. But regardless of this, that just means I'm buying in cheaper, hopefully. And for me, Airbnb is a long-term hold. I personally think it has huge potential to become the market leader. I think it's going to double in the next year and probably 3 to 4x in price over the next 2 to 3 years. That's it for this video. YouTube tells me that 75% of you all watching aren't subscribed to the channel yet. So for Christmas this year, my wish is for you to hit that subscribe button, ring the notification bell, and if you're feeling generous, leave some comments and likes for me. Let me know what you want me to cover in my next video, and I'll try to make that happen. I appreciate your time. I appreciate your thoughts. Appreciate you watching. And until the next video, happy holidays.